Okay, let us look at this question under share option. The following information relates to Adam Limited for the year ended 31st December 2023. Profit after tax 2,400, 2.4 million. Ordinary shares in issue throughout the year 8 million. Share options outstanding 1 million. Option with what? With an exercise price of what? 80 pesos per share. Average fair value of one ordinary share during 2023 is 1 cedi, 20 pesos. Calculate the basic earning per share. Calculate the diluted earning per share using the treasury stock method. Okay, let us look at how we can go about this question. The company name is what? Adam Limited. So first, calculate what? The basic earning per share. Profit after tax minus what? Preference dividend, all divided by your what? Your wins. Now, in this question, let us look at our profit after tax is what? Is 2.4. So that's 2,400. All divided by your what? By the number of shares. How many shares did they say the company issued? 8 million. So you make it 800 or 8,000. So what do you have here? That gives you 0.3 pesos. All right, then we can now go on to calculate for our share options. So how do you calculate our shares? So you say you calculate the percentage in what? In dilution. Now, how do we calculate our percentage in dilution? The formula is that you find what? Market price per share minus exercise price per share. Then you divide everything by what? By the market price per share. Then you multiply by what? By 100%. So in this question, we have our what? Our market price. Your market price per share is 120 pesos, and the exercise price is what? 80 pesos. Okay. So you'll have what? 120 pesos minus what? 0.8, all divided by 120 pesos, multiplied by 100%. How do you have? So this gives you 33.3%. Now the next, find the number of what? Of shares. So how do you find the number of shares? So you pick is what? Is option, share option multiplied by percentage and dilution. We know our share option. How much share did they give them? They gave them 1 million share outstanding. So you have what? 1,000 multiplied by what? Percentage in dilution, which is 33.3%. How do we have here? That gives me 33.3. So the next action is what? Find the what? Find the wins. And the wins, you start with your outstanding share. Outstanding share given us how much? Outstanding share is 8 million. So you'll have what? 800, 8,000. Then your what? Then you add your share option converted, which is what? 3. All right. So that gives you what? 8,333.3. Good. Now we can find our diluted earning per share. So our diluted earning per share is your what? Is your profit after tax less what? Preference dividend, if any, all divided by your what? Your wins. Good. So what do we have here? We have our profit after tax. So we have much. What is the profit after tax? 2,400. All divided by what? By your wins, which is 8,333. How do you have it? So that gives you 0.39. Good. Now, alternatively, you can do it this way. 1. Determine share option in what? In value. Now, they've given you how much? Share option. Option of what? 1 million, which is 1,000. It's in the question. Outstanding share option 1,000. And exercise price. Exercise price is 0.8 pesos. It's in the question. Now, when the motor, that gives you what? 800 here. After that, then what? You determine what? Number of shares. If the shares are brought back. How do you get that? you will pick the what share option in value, the one that we just calculated, which is what how much 800. Then you divide by what market price. Market price of the share check is what 1.2. It is 1.2. Let me divide. What do you have? That gives you 666.7. Okay. So now that we've determined our number of shares, then three, find the incremental shares if bought back. So what you have to do, so you have what your share option, your share options as given. How much your share options? 1,000, right? 1,000,000. Okay, 1,000. Then you less the shares. This one is in what? In series. Okay. Which is how much? 666.7. What do you have? 3.3. All right. So after that, you find your what? Find your what? Wins. The same thing. So you have your what? Your outstanding share. Outstanding shares is how much? 8,000. Then incremental shares. So this is what we call incremental shares. So incremental shares is how much? 3.3. Then you add what do you have? You have what? 8.3. Then you can find your what? Diluted earning per share, which is your profit minus what your preference dividend over what over your wins. How do you have? We have what 2,400 all divided by 8. It gives what 0.29 dot. So applying the two methods, it will you end up getting the same results. So at the end of the day, you have your basic earning per share. So you have much 0.3, and then you have your diluted earning per share is what 0.29. At the end of the accounting year, in the financials or in the financial reporting of the company, they will report the diluted earning per share to be the basic earning per share of the company after the dilution of what of the shares with what share options. Now we have what we call anti-dilutive. Now what is anti-dilutive? Anti-dilutive is when basic earning per share is less than diluted earning per share. So here, if your basic earning per share is 0.3 and your diluted earning per share is 0.35, it means this one is what anti-dilutive. Therefore, you are not going to consider it in their financial. So you will rely on what's on the basic earning per share in what's in the financial reportings.